Let's welcome in Tom Lee now. FundStrat's head of research and a CNBC contributor with us, as you see, at Post 9. Welcome. It's good to see you.
Great to see you.
Let's hit tech first. Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness. And now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? Up 1.75% today, the NASDAQ up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. You know, the probabilities are now solidified. And that's actually bullish for tech.
Because the CPI was, you know, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5% after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Yes.
Attention all stock market enthusiasts. Could Nvidia, the titan of the tech industry, be on the verge of yet another groundbreaking leap? With whispers of a transformative project known as Blackwell making the rounds, the excitement is palpable. As the company prepares to unveil this ambitious leap in AI and quantum computing technology, Nvidia appears ready to redefine cutting-edge performance in the coming years. But that's not all. Supply is racing to catch up with the overwhelming demand. Are you ready to delve into how Nvidia is charting this bold course for the future? even as rivals like AMD try to close the gap? Strap in as we explore the tantalizing details behind this emerging narrative. Welcome back, everyone, to Investocracy.
Yes, and we could tell the market was sort of holding their breath on both, because once Nvidia reported, the markets began to levitate. And of course, we're seeing the market reaction today to Treasury Secretary. These are all both good events, but also showing you there's been a lot of cash on the sidelines, which is why we're rallying.
Right.
Yeah.
Although making a pretty good yield, I imagine. What's the impetus to leave those sidelines if rates can hold these levels overall?
Well, I think one thing we have to keep in mind is there's $7 trillion of cash on the sidelines, which I think in general portfolios are overweighted and risk-free. And I don't know if it's going to be 5% 2 years from now. So I think investors, as they're planning ahead and they're seeing an economy that's resilient, I think the case for equities is still very strong right now. Have you done any work on earnings for next year or the year after? We're actually working on it now. Our outlook comes out December 12th.
All right. So we'll check back with you then.
Yeah.
Meanwhile, what sectors do you favor at this point?
Well, I think the template that we think makes sense is buy things that either benefit from a dovish Fed or a Trump White House, which is small caps, cyclicals like the financials, the regional banks and industrials, and of course crypto, especially Bitcoin and some of the proxies like MicroStrategy and Semler Scientific.
But did you hear what we were just talking about? Can the Trump administration get away with the pro-growth policies and a dovish Fed at the same time? Because some of them work against the Fed being able to cut rates.
Yeah. I mean, I'd say the market is very skeptical at the moment. That's what we're hearing from our clients. But that also means that's room for positive surprise. And I think one thing to be mindful of is the Fed can be dovish even if there's resilient growth, as long as inflationary pressures and expectations remain intact. And so far, that's been the case.
Has it, though? We're seeing a little bit firmer core readings on inflation, and I guess it depends on what he does with tariffs.
Yeah, but if you look at survey expectations, whether the Federal Reserve Survey or UMich, we're seeing 5, even 6-year lows on inflation expectations. So we're back to pre-pandemic levels from what consumers see, and then if oil falls, as you know, that sort of pushes down the inflation forward curve.
In a world where microchips power everything from your phone to AI chatbots, Nvidia stands as a towering figure. Over the past 2 years, Nvidia's stock has defied gravity, doubling annually, soaring to a 239% height in 2023, and proudly boasting an impressive 170% year-to-date increase. It's as if Nvidia's stock had a hotline to destiny, dialed in for success. This astounding trajectory, however, faces new challenges as the company looks ahead to 2025. According to Wall Street, while the consensus anticipates a still robust 51% revenue growth next year, an almost Herculean effort given its projected $129 billion revenue in 2024, Nvidia's pace is starting to ease. What plays into this anticipated growth slowdown? The introduction of Blackwell, Nvidia's new generative AI and quantum computing brainchild, could usher in the next wave of performance platforms. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
On the 1-year expectations, right?
Yeah.
Fives have not been as well behaved.
That's right. And, those surveys are notoriously a little funky, because if you look at the range of answers and the actual data, some people put 1,000% as the survey answer. So they can tend to skew the actual medians.
Right. Meantime, there is this school of thought that commodities are not suggesting rampant inflation or a return to a double-top CPI. You got Europe increasingly exporting disinflationary narratives, certainly China.
Yes,
right?
That's right. And I think there are many people who thought inflation would pick up because of tariffs, but as you know, it's not clear really what ends up being implemented. And if we get milder tariffs, that's actually less inflationary pressures.
Page 1 of the Times over the weekend was about companies elbowing each other to get in front of the president-elect to make their case to be carved out of tariffs.
Yes.
And then this morning, Reuters has a piece on the farm industry, again, looking to be exempted from deportationary efforts. how much policy risk do you think is going to be embedded in the next year at least?
Well, I think this is what investors are concerned about, because we know that there was a campaign that was run on tariffs and deportations, but as you know, those can be very harmful to the economy. So I think that having the right cabinet picks can actually get us into sort of the right blend of sort of outcomes, and I think that's what the market's starting to price in.
Meaning you've been impressed with the picks so far?
Yes, I think not only have I been impressed, but we can tell from our client feedback that the markets really like this.
The stakes are high with Blackwell, touted as a complete computing platform aligned to deliver astonishing feats of technology. But will NVIDIA's demand numbers tell a similar tale? CFO Colette Kress highlighted the urgency in scaling up supply to meet what she describes as a staggering customer requests during NVIDIA's fiscal 2025 Q3 earnings discussion. NVIDIA's formidable competitor, AMD, isn't turning a blind eye either. Their data center, with an eyebrow-raising 122% growth, has NVIDIA firmly in their sights. Yet, NVIDIA's stronghold remains intact, securing a whopping $30.8 billion from data center GPUs last quarter, eons ahead of AMD's $3.5 billion. Amidst this race, the specter of a slowing revenue growth looms large, with NVIDIA's earnings mapped to grow modestly, in parallel with their revenue at around 50%. This expected performance modulation redirects the market's gaze towards valuation risks, where a possible decrease in investor bidding could sway NVIDIA's stock from its predominant trading status. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Because some doubted the fact that, well, if Nvidia struggles, well, you know, that means that the Mag 7s are going to go down, and then the overall market's going to be in trouble. Not so fast. You've had a continued big jump in tech positioning, according to Deutsche Bank today. You're looking at the stocks month to date for many of these names, and it is stark, obviously, where Nvidia is relative to the rest. But they suggest positioning is very elevated again, factoring in modest reacceleration in earnings growth, bucking the gradual slowing over the last 3 quarters.
You know, with regards to NVIDIA, and good analysis, Carrie, I think we all know that it corrects quite often. And then usually that is a setup for a very big rally, which I think is going to happen again. There's no indication that demand for the chips that they're producing has gone down at all. The only thing I would worry about with NVIDIA is when their supply catches up, there's just I don't see that on the near-term horizon.
Yeah, I know, like, wake me up when that happens,
exactly.
Right? 'Cause it doesn't feel like it's anywhere anytime soon.
So if I can just
go ahead.
You talked, Joe, about dip buying if Bitcoin corrected. Well, hey, guess what? Have it happening in NVIDIA. I'll bet you'll see the buying come in.
As we inch closer to another fiscal year, NVIDIA's tale is far from reaching its final chapter. Although whispers of slowed momentum circulate, the strategic launch of Blackwell might position NVIDIA in the driver's seat, pushing boundaries in AI advancement. However, with current indicators and Wall Street's expectations, NVIDIA's stock may not reach meteoric levels in 2025. A plausible 28% price uplift with a future PE standing at 40 paints a more restrained picture. For investors, the calculated whispers of smart, long-term investments are much clearer than the siren song of quick, monstrous returns. In the landscape of stock exchanges, where today's certainty could become tomorrow's speculation, what are your thoughts on NVIDIA's journey through the market labyrinth? Weigh in with your views as we witness another chapter unfold in the exuberant play called the stock market. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.